Hey, it is Troy Stavros with Cornerstone Realty Associates, and the July data is in, so it's time to go over our August housing market report for East Tennessee and the 9 markets that we serve. There's some interesting information that the data is pointing out that you should know, so let's jump into it and find out what the data is telling us. So, first off, a regional overview. Here's the big picture. Across the 8 markets that I track monthly, 6 of the 8 posted tighter absorption rates than a year ago. So that means inventory is shrinking and prices are appreciating. And buyers continue to transact despite mortgage rates that have hovered near 7% for the better part of 2 years. But the number that absolutely jumped off the page this month is Tellico Village. The absorption rate there collapsed 42.5% year over year. A year ago, Tellico Village was sitting at nearly 6 months of supply. That is a buyer's market. Today, 3.37 months. That is a seller's market. That's the single largest absorption rate shift in the entire region, and we're going to talk about what is driving it. Also, we saw Roane County's closings surge nearly 36%. Farragut's median sale price crossed $750,000. Blount County's median jumped over 11% year over year, and Lenoir City resolved a pricing question that I raised in last month's report in the exact direction that the data suggested that it would. So, let's get into each market. So, Knox County. Starting with Knox County, the anchor of our region, July delivered 792 closed sales, which was up 8.6% from last July. Year to date, we've recorded 4,660. That's a 7.2% increase over last year, and that's the kind of sustained volume growth in a 7% interest rate environment that tells you everything you need to know, and that is that buyer demand has adapted to the current conditions. Okay, the median sales price rose to $410,000 in Knox County, which is up 3.8% year over year. The year-to-date median is essentially flat, $399,900 versus $400 last year, which tells me we're looking at modest, sustainable appreciation. Nothing overheated, nothing concerning, just steady growth. The absorption rate sits at 2.92 months, which is slightly improved from 3.01 a year ago. Active listings ticked up to 1.4%. Homes are still selling in a median of 20 days, and it's the overpriced outliers that are pulling the average higher. Now, here's what's really interesting in Knox County. The luxury segment is having a breakout year. The $700 to $750K bracket surged over 92%. The $800 to $850 range jumped 160%. Year to date, the $850 to $900,000 bracket is up over 72%. So if you own a luxury home in Knox County, you are in a strong position right now. So here's the forecast for Knox County. My forecast for Knox County is that the median sales price finishes 2026 in the $405,000 to $415,000 range. Total closings will be projected between 8,000 and 8,500 units for the year, which is a healthy 6 to 9% increase over 2025. The market remains in balanced to slight seller territory, and the lock-in effect continues to be the primary constraint on inventory. All right, within Knox County, let's talk about Farragut. So, Farragut remains the most competitive residential market in East Tennessee. Closings rose nearly 24% year over year, 52 sales versus 42. Year to date, Farragut is up 14.4% in closings. Pending sales are up nearly 16%, so the pipeline is robust. The median sales price hit $749,950 in July. That's up almost 10% from $682,500 a year ago. The absorption rate tightened to 2.7 months from 3.3. That's an 18% improvement. And active listings fell 12% to just 117 homes on the market. At the current pace, every home listed would be absorbed in under 2.3 months. And here's the number sellers will love. The median days on the market dropped to just 12 days. 12! That's down from 18 a year ago. a 33% reduction in marketing time. So if your home is well priced in Farragut, you're going to go under contract in less than 2 weeks. So Farragut is increasingly a luxury market. The 800 to 850 bracket went from 1 sale last July to 5 this July. The 1 million to 1.1 million range produced 3 sales versus 0 a year ago, and year to date, the 1.1 million to 1.2 million bracket is up 75%. So my forecast is expect the median to push toward and potentially exceed $775,000 by the fourth quarter. Buyers should expect competitive conditions on anything well priced under $800,000, with multiple offers common in the $500 to $750 sweet spot. Sellers hold significant leverage, but the data shows that the market still punishes overpricing, so strategic pricing remains essential. Let's look at Blount County. Blount County delivered the strongest year-over-year price appreciation of any major market in this report. The median surged to $420,000, up over 11% from $377,800 a year earlier. The average sales price jumped nearly 14%, and here's the key insight. The gap between the July number and the year-to-date number tells me that appreciation is accelerating, not flattening. So the most recent data is outpacing the longer-term trend. Now here's something I want everyone to pay attention to. For the first time in this market cycle, Blount County's median, $420,000, has crossed above Knox County's median of $410,000. A year ago, Blount was $13,000 below Knox. Today, it's $10,000 above. That crossover is significant, and it may become permanent. If you're a buyer considering Blount County, complacency is your biggest risk right now. The absorption rate sits at 3.13 months, which is seller favorable, and new listings did rise 14%, which is the strongest new listing growth of any market this month. So sellers are responding to the pricing strength. That could moderate the imbalance over time. So the forecast for Blount County? The median should sustain in the 405 to 430 range through the end of the year. But if new listing growth continues at 10+% through the third quarter, the absorption rate could stabilize in the 3 to 3.3 range. Still seller favorable, but slightly less competitive than earlier this year. Okay, Loudon County. Loudon County's transformation continues to be one of the most dramatic stories in the region. Active listings plunged over 17% year over year, 75 fewer homes available compared to last July, and the absorption rate has compressed from nearly 5 months a year ago to 3.52 today. That's a 29% improvement. But here's the tension in Loudon County. While the absorption rate has tightened dramatically, the average days on the market has moved in the opposite direction, up to 102 days from 78. The sale to original list ratio sits at 93.8%, the lowest in the report except for Sevier County. So what does this mean? Sellers have structural leverage from the supply reduction, but they're not capitalizing on it because they're still overpricing from day one. The market is tightening, but sellers are leaving money and time on the table because of aspirational pricing. So my forecast for Loudon County? Absorption rate should continue compressing towards 3 to 3.5 months. The median should finish the year in the $530,000 to $575,000 range, and the message for Loudon County sellers is simple: price accurately from day one. The data is crystal clear, and the market rewards precision and penalizes aspiration, even in a tightening environment. Okay, so within Loudon County, we have Lenoir City. Last month, I flagged Lenoir City as a market at a crossroads. June's median had spiked to $529,000, which conflicted with declining pending sales. I said if it was a sales mix effect, the median would normalize back to the $490,000, $510,000 range. Well, July's median came in at $425,000, confirming exactly that. This wasn't depreciation, it was simply the composition of what sold changing month to month. The year-to-date median of $479,000 versus $452,000 last year is a 4.2% gain, and that gives you the real underlying trend: stable, moderate appreciation. So, what's the forecast for Lenoir City? Like Loudon County, Lenoir City shows elevated days on the market and a sale to original list price ratio of 94.4%. Sellers throughout Loudon County, and Lenoir City sits within it, are overshooting on initial pricing. The absorption rate has tightened to 3.38 months, so conditions favor sellers, but you have to price right to capitalize. So the forecast: the median price settles into the $460,000 to $490,000 range for the full year. Also within Loudon County, we have Tellico Village. Let's talk about the transformation story of the summer, Tellico Village. The absorption rate dropped from 5.86 months last July to 3.37 this July, a 42.5% reduction. That's the single most dramatic market shift in this entire report. So what's driving it? Supply. Active listings collapsed 29% year over year from 168 homes to only 119. New listings fell over 16% year to date. Homeowners in Tellico Village simply aren't listing. Many are on favorable mortgage terms that they don't want to give up, and the community's appeal means there's limited motivation to leave. The result is a dramatic supply squeeze. And on the demand side, closings actually declined 13% in July. So this isn't a demand surge, it's the disappearance of inventory creating competitive conditions. So, here's the wrinkle. Average days on the market jumped to 138 days, and that sale to original list ratio of 93.7% is the lowest in the report. That seems contradictory with a 3-month absorption rate, right? But it makes sense when you understand that many current closings represent homes listed months ago at higher prices that eventually sold after reductions. The absorption rate reflects current dynamics. The days on the market reflects past listing strategies. As sellers adjust their pricing, I expect days on the market in Tellico Village to come down. So, the forecast for Tellico Village: median prices finish 2026 in the $640,000 to $670,000 range. The absorption rate remains in the 3 to 3.8% range. And if you own a home in Tellico Village and you've been thinking about listing, the market has shifted dramatically in your favor over the past 12 months. But, and this is critical, realistic initial pricing is how you capitalize on it. Let's jump over and look at Anderson County. Anderson County continues to offer the region's most accessible price point. The median rose to $334,900, that's up 3.3%, but on a year-to-date basis, the appreciation is more impressive. $345,000 versus $320,000. That's a 7.8% gain. The average sale price year-to-date is up nearly 11%. Anderson County's price growth is outpacing Knox County on a percentage basis, and that reflects value discovery as buyers migrate to more affordable markets. Active inventory rose 7%, and new listings increased over 10%, so the absorption rate has loosened slightly to 3.29 months from 3.2. But here's the good news for sellers. Even as supply grows, homes are still selling significantly faster. Average days on the market dropped from 62 to 44, that's a 29% reduction, and the new inventory is being absorbed quickly and not piling up. So, what is the forecast for Anderson County? Median home price finishes the year around $340,000 to $355,000, representing a 6 to 10% annual appreciation. The absorption rate will likely drift towards 3.2 to 3.5 months, giving buyers slightly more breathing room. For anyone priced out of Knox County at $410,000 or Blount County at $420,000, Anderson County at $335,000 represents significant relative value with strong fundamentals. This remains the best entry point in the East Tennessee market. Roane County. Roane County posted the strongest closing growth of any market in this report. 87 sales versus 64 a year ago. That's a 35.9% surge. Year-to-date, closings are up over 21%. Pending sales are up over 20%. This is legitimate, sustained momentum, not a one-month blip. The median price jumped to $360,000 from $302,500. That's a 19% gain. Now, with small sample sizes, that number can be volatile month to month, so I lean on the year-to-date median of $344,000 versus $318,000. That's an 8% gain, as the more reliable measure, but still good. What's really happening in Roane County is an upmarket migration. People are moving higher in price. The $350,000 to $400,000 price range surged 250%. The $400,000 to $450,000 bracket jumped 200%. So it's not just homes getting more expensive, the entire mix of what is selling is shifting towards higher price points. So what's the forecast for Roane County? The median price settles in the $340,000 to $365,000 range. Transaction volume should moderate from that 36% growth rate, but still remain solidly positive. The absorption rate is on track to finish below 3.5 months for the year. So for buyers, Roane County at $360,000 offers the second most affordable entry point behind Anderson County, with arguably the strongest momentum trajectory in the region. And then there's Sevier County, the region's outlier and the lone buyer's market in this report. Closings rose 12.4% and active listings declined nearly 6%. So the trends are directionally positive, but let's be honest about the math. 2,120 active listings against 191 monthly closings means it would take over 9 months to clear inventory. That is deeply in a buyer's market territory. The median price ticked up to $465,950, just a 1.4% gain, the most modest in the region. And the sale to original list ratio of 92.3% is the lowest anywhere I track, which means buyers have significant negotiating leverage. The structural challenge remains the concentration of investment properties and former short-term rentals weighing on the supply. So, what is the forecast for Sevier County? The absorption rate gradually compresses towards 8.5 to 9 months by the end of the year, but balanced conditions are not achievable this year in 2026. The median price holds in the $460 to $480 range, so if you're selling in Sevier County, you need to price aggressively from day one. That 92.3% sale to original list ratio means the average seller is leaving 7.7% on the table. In a market with 9+ months of supply, the sellers who price to market value on day one will dramatically outperform those who test and reduce their price later. Okay, let's put this into perspective. This chart shows every market's absorption rate in July of 2025 versus July of 2026. And the story here is unmistakable. 7 of the 8 markets I track posted a lower absorption rate than a year ago. The only exception is Anderson County, which loosened marginally from 3.2 to 3.29 months, and even that is functionally unchanged. Now, if you're newer to these reports, let me quickly explain what that means in practical terms. The absorption rate tells you how many months it would take to sell every home currently on the market at the current pace of sales. A lower number means inventory is moving faster relative to supply. So for sellers, that means less competition from other listings, stronger negotiating position, and shorter time on the market. For buyers, it means fewer options, more competition for well-priced homes, and less leverage at the negotiating table. Generally, anything below 4 months favors sellers, 4 to 6 months is balanced, and above 6 months favors buyers. So, look at Tellico Village. That gray bar was pushing nearly 6 months a year ago. Today, it's down to 3.37. Loudon County dropped from nearly 5 to 3.52. Farragut tightened from 3.3 to 2.7. Across the board, the direction is the same. Tighter conditions, less inventory, more competition. Sevier County is excluded from this chart because at 9.34 months, it would distort the scale. So it remains the sole buyer's market in the region. So here's how all 8 markets rank by absorption rate, tightest to loosest. So Farragut at 2.7 months was the tightest. Knox County 2.92, Blount County 3.13, Roane County 3.22, Anderson County 3.29, Tellico Village at 3.37, Lenoir City at 3.38, Loudon County at 3.52, and then the outlier, Sevier County, at 9.34. The critical observation is the compression. 7 of 8 markets are clustered between 2.7 and 3.52 months. That's a remarkably tight band for markets with very different price points and demographics. A year ago, this same group ranged from 3 to nearly 6 months. The convergence towards uniformly tight conditions is the defining trend of 2026. And for pricing context, Farragut at $749,950, Tellico Village $362,500, Loudon County at $564,950, Sevier County at $465,950, Lenoir City at $425,000, Blount County at $420,000, Knox County at $410,000, Roane County at $360,000, and Anderson County at $334,900. There's a market for every budget in East Tennessee. Okay, now let's zoom out to the macro picture, because understanding the national forces at play helps you make better local decisions. The headline number for when we did this report is 6.71% for a conforming 30-year fixed mortgage rate. That's essentially where we've been, give or take 30 basis points for 18 months. And here's what I want everyone to understand. The 7% rate environment is not suppressing this market anymore. It's shaping it. The lock-in effect, the simple math that trading a 3.25% mortgage for a 6.71% mortgage makes no financial sense. This is the single most powerful force in East Tennessee real estate right now. It explains the absorption rate compression in Tellico Village. It explains why Farragut has just 117 active listings. It explains why Roane County's new listings grew only 4%, while closings surged 36%. Homeowners are staying put because the math of moving doesn't work, and that's choking supply across the board. The Federal Reserve under Chairman Kevin Warsh holds the federal funds rate at 3.5 to 3.75% and has adopted a posture of deliberate ambiguity. No forward guidance like the past chairman, no signals on cuts or hikes, just sustained uncertainty. For housing, this means continued rate stability in the mid to high sixes, exactly the environment that perpetuates the lock-in dynamic. If rates dropped towards 5.5%, we'd see existing homeowners list, easing supply. If rates spiked towards 8%, demand would crater. Instead, we're in the zone that simultaneously discourages listing and allows adapted buyers to go ahead and transact. That's the precise combination producing the tight conditions documented throughout this report. So why isn't the Fed cutting? Headline CPI inflation came in at 3.4% in July, still above the 2% target. Core CPI came in at 2.48% and is tantalizingly close to the 2% target, which explains why they're not hiking further. But here's the feedback loop that matters. Persistent shelter inflation keeps the headline elevated. High rates suppress supply. Tight supply supports home prices. Elevated prices feed into CPI, and elevated CPI keep rates high. Breaking that loop requires either a supply surge or an external shock, and neither appears imminent. So, real GDP growth decelerated to 1.5% annualized in the second quarter, down from 2.1% in the first quarter. For East Tennessee, this moderate cooling is actually favorable. It's slow enough to keep inflation contained and prevent hikes, but strong enough to support employment, consumer confidence, and household formation, which is the underlying demand drivers for housing. The 1.5% middle ground threads the needle. So, the wild card is energy. Brent crude, as of this report, was $88.50 a barrel, up 30% year over year, and it's filtering directly into consumers' budgets. For a car-dependent region like East Tennessee, higher fuel costs reduce the monthly budget available for housing. So when filling up the tank costs $20 more per week than a year ago, that $80 monthly impact competes directly with mortgage capacity. At the margin, this may be contributing to the slight softening in buyer urgency visible in markets like Loudon and Lenoir City, where pending sales dipped even as supply tightened. So what does this mean for rates through the rest of 2026? My read, the rates remain range-bound between 6.4% and 7% through the end of the year. The Fed has no compelling reason to cut with headline CPI above 3%. No reason to hike with the core essentially at target and GDP decelerating. The most likely scenario is continued pause, continued stability, continued lock-in effect, continued tight supply. And the practical implication for buyers is straightforward. Waiting for meaningfully lower rates is not a viable strategy. If the Fed begins cutting in early 2027, which markets appear to be pricing as the earliest realistic timeline, the resulting wave of new listings would ease supply pressure, yes, but it would also bring significantly more buyer competition into the market. The buyers who transact today at 6.71% with 2.7 to 3.5 month absorption rates will likely have better negotiating position than those who wait for 5.75% rates in a market flooded with returning buyers. So before I wrap up, 4 trends to watch for the back half of the year. First, does the inventory tightening in Tellico Village and Loudon County continue? If it does, we could see sub 3-month absorption rates by the fourth quarter, and that's when price appreciation really accelerates. Second, Blount County's pricing crossover with Knox County. If that persists, it represents a fundamental shift in relative value and could redirect buyer traffic back to Knox County. Third, Roane County's sustained volume growth. At 21% year-to-date closing growth, they're absorbing buyers at a rate that will exhaust supply if it continues. Watch for compression below 3 months in Roane County. And fourth, Sevier County's inventory trajectory. Can closings sustain 12% growth while inventory keeps declining? If both hold, the absorption rate could break below 9 months by the fourth quarter. So, bottom line for sellers. Conditions favor you across the region, but pricing strategy still matters enormously. The markets with the highest days on the market, Tellico Village, Sevier County, Loudon County, are markets where sellers are consistently overpricing and paying for it. The markets where homes sell fastest, Farragut at 12 days, Blount at 17, Knox at 20, are markets where pricing accuracy is driving efficient outcomes. Price it right from day one, and this market will reward you. Bottom line for buyers, the best value opportunities remain Anderson County at $335,000 and Roane County at $360,000. Strong fundamentals at price points well below the regional average. Sevier County offers the most negotiating leverage, but comes with structural challenges. And in every market, the data shows that acting on current conditions rather than waiting for hypothetical rate relief continues to be the winning strategy. Well, that's the full picture for 2026 August. So if you want to talk about any of that stuff that I talked about, or maybe about a specific situation that you're dealing with, don't hesitate to reach out to me. I would love to help you or answer any questions that you might have. This is Troy Stavros with Cornerstone Realty Associates, and I will talk to you next month.